Hello and welcome. It's DC Capital and this is episode 15 of the Index Futures series. As always, I will start the video with the weekly review, last week's trading, and finish the video with the market outlook for the upcoming trading week. Let's jump right into last week's trading for the E-mini S&P 500. Welcome to the weekly review. Quick recap on the daily chart for the E-mini S&P 500. We can see that price is in a consolidation right now as the sell side liquidity has been taken with that move lower in price, and the volume imbalances are acting as support and resistance for price. With that in mind, let's study the weekly range for last week's trading. Weekly range for the E-mini S&P 500 on a 1 hour chart. We can see that the high of the week has been created during the London Open kill zone, and there's a 70% chance that the high or the low of the week is being created on Tuesday during the London Open kill zone. Price is trading lower for the rest of the week, and on Friday price is trading into the low end of this 1 hour fair value gap, which is here, and from there price is trading aggressively higher, seeking buyer side liquidity and closing the day with an up close candle. This is Monday's trading, the 1 minute chart for the E-mini S&P 500. This is the bigger picture of this trading setup, and what we can see here is that price is trading sell side liquidity with resting sell stops, and my initial target for the day is this sell side imbalance, this fair value gap in here, and or this 1 hour bearish order block, which is delineated with that blue line. Check that out on your charts. You can see that 1 hour objective is really clear. This is where the magic happens. 1 minute chart zoomed in. We can see that again. Sell side liquidity has been raided. Sell stops are becoming now market orders. Smart money is counterparty to that, so they are buying long, accumulating long positions. Reaccumulation in this buy side imbalance, sell side inefficiency. We can see the bullish market structure shift on that candle and the displacement higher after the sell stops are being raided. Also notice that we're operating with the CME Open, which is at 8:20 New York local time, and we have a really clear profit objective, which is the low end of this 1 hour fair value gap. Entering long in this fair value gap, placing the stop loss below that short-term low and targeting the low end of this 1 hour fair value gap. Also notice that this is the low hanging fruit objective, low resistance liquidity run from a discount market into a premium array. This is Tuesday's trading for the E-mini S&P 500, the 4 minute chart, and we're operating in the extended New York Index morning session. Tuesday has a 70% likelihood to create the high or low of the week, and in this case I'm anticipating the high of the week being created. Why? Because during London price traded higher and most recently raided the buy side liquidity pool, and we are in a risk off environment. Price is setting up a deep premium to induce buyers for smart money to be counterparty short. At this end of the extreme, I'm looking for high probability short setups after the buy side liquidity rate with the displacement lower. Entering after the displacement lower in this sell side imbalance and placing the stop loss above those relative equal highs. And I always recommend to not put the stop loss right at the short-term high, but to leave a little bit of space in here, because sometimes the market can retrace, go for a liquidity grab, offset distribution, and then expands aggressively lower into my objective. So this rule of thumb: don't place the stop loss too tight, always leave some sort of space. We can see that the bearish order flow is being active right now. Up close candles are getting respected, and here there's a possible scale in for shorts targeting the sell side liquidity below here. Time of day: equities open at 9:30 New York local time, is a minor Judah swing, what we can see here, and is rating the buy side liquidity. After that Judah swing, we are targeting opposing direction. Wednesday's trading 5-minute chart for the S&P 500. Quick scalp in the New York morning session. We can see that the Judah swing on this candle at 9:30 equities opening is trading higher into a premium PD array, which is this bearish order block and this sell side imbalance. Also notice that this buy side liquidity pool has been raided, and buy orders are becoming now market orders. We are counterparty to that, and we are shorting at current market price inside this premium PD array, aiming for the sell side liquidity below that low. Thursday's trading for the S&P 500 futures contract. Price is trading higher and is building in a premium. Most recently, the buy side liquidity pool has been raided, and we can see on that candle the bearish market structure shift and this tiny sell side imbalance for a possible short entry. The first objective is this buy side imbalance, and my final target for this particular trade is the sell side liquidity in the external range liquidity. And it's Friday. We're looking at the 5-minute chart for the S&P 500 December contract. We can see that price rated most recently the sell stops with sell side liquidity, and it is aggressively trading higher from there. Also, if we look closely, this red line is delineating the low end of the 1-hour fair value gap. This is real support and resistance, and you can see the algorithm working here. My drawn liquidity is this 1-hour sell side imbalance, and also this is my low hanging fruit objective, and I'm personally content with enough. I don't ask for too much, so I'm taking my profit at the low end of this 1-hour sell side imbalance. And now I will give you a homework. Find that level here, that red line, that low end of this 1-hour fair value gap in your charts for the E-mini S&P 500 December contract, and study how price is respecting that level during the whole entire week. This level is acting as real support and or resistance within algorithmic principles. With that being said, let's jump right into the market outlook for the upcoming trading week. Welcome to the market outlook for the E-mini S&P 500 futures contract. And on this chart we can see that the sell side liquidity has been rated on this daily candle, and price is respecting the volume imbalance here on Friday. My next strong liquidity is this buy side liquidity pool here, and I think that this buy side liquidity pool will be rated really fast on Monday, and price could eventually trade up into this sell side imbalance above this intermediate term high. But overall, I'm still bearish for the E-mini S&P 500 futures contract, and my focus is on shorting the market after price rallied aggressively higher into a premium PD array. US dollar index daily chart, and we can see that price is revisiting this buy side imbalance once more after taking out this short-term high by just a little bit. But overall, I'm still bullish on the US dollar because in my opinion we are still in a risk-off environment with a strong dollar. But if the US dollar is showing weakness to me, a possible drawn liquidity could be this buy side imbalance. But for me, this is highly unlikely because I'm expecting the US dollar to continue to rise and to continue to seek buy side liquidity, and I'm expecting orders to be accumulated here in a discount array. Potential scenario for the start of the upcoming trading week: we could see the US dollar trading lower into this 4-hour bullish order block and below this low to engineer liquidity to reprice higher into fair value. If this scenario unfolds in the marketplace, we can also see that the S&P 500 is taking out the relative equal highs shown on the previous slides. But always remember, be patient and submit yourself to time. And sometimes less trading is better trading. With that being said, I will finish this video here. Thank you so much for your kind support. And if you liked the video, give it a thumbs up, comment and subscribe to my channel. I wish you a great start in the upcoming trading week, and be safe. It's DC Capital.